Hey everyone, I'm Charting Man Dan, technical analyst and trader with the Chart Guys. In this video, we're going to check in on the broader market as the bulls bought the gap down open, but some sectors performed well and others held the bulls back. We'll see what has to happen tomorrow for any bounce continuation. Also going to go over a bit of the live streaming trader's dilemma, which I encountered today. Just a heads up, we'll be publicly live streaming tomorrow morning at 9 a.m. Eastern on our YouTube channel to show you how we do things at the Chart Guys. But first things first, let's check in on the markets. We got SPY and QQQ breaking to weekly lower lows. Granted, there's no follow through at the moment, but it's a bear break. We hit the lowest levels of consolidation that we've seen the last couple of months, but was looking long on the morning. Why did we choose this morning to be looking long and not Thursday or Friday? And for me, the answer is the gap. SPY and QQQ setting up for the first gap down open of this drop, which has me interested in looking for some bounces this morning. I will want to see daily lower highs before looking bearish again from here personally. So as we know, gaps oftentimes mark climax tops and climax bottoms. And on this drop, over the last few days, we're not oversold on any meaningful time frame. We're not testing key support on Thursday and Friday at that point in time. And so to get me interested looking counter momentum, it's got to be the gap. And so we gapped down. The bulls had a really nice morning bounce, just straight up off the low. There was a little bit of a drop first, and knew to be patient on the morning because if I'm buying a gap down open, I want things as beat up as possible. Whereas we were opening this morning right at hourly EMA 12 resistance on the futures chart, and that had been rejecting the price all Friday, Sunday night into Monday morning. And so we then came down, swept the lows of pre-market into the V-shaped bounce. All that said, we have not confirmed hourly uptrends yet. So the burden is on bulls tomorrow to hold the low of today and break the high of today to confirm the hourly uptrend. If they pull that off, we zoom out and we look for a daily lower high to be the result of that bounce. And that's what I was talking about, looking for a bear. If I'm looking short from here, I want to be on a daily lower high at this point. The S&P 500 pulled back more significantly than the NASDAQ, and that's because everything bounced together in terms of QQQ, XLF, XLV, but XLF and XLV gave back the bounce much more quickly, and they hit new low of the day. And so you can see the big upper wick on SPY, and we look at QQQ, same deal with the gap down open, and there's not as large an upper wick, definitely an upper wick. Again, got to hold the low of today and break the high of today to confirm the hourly uptrend. Then we zoom out and scout a daily lower high. Keeping in mind, this right now is still a daily stair-step drop of 7 days in a row, which is why for me personally, I want to see the daily bounce before I'm scouting bearish again. Remember this pattern we were looking at last week when we were testing the resistance? 2-day time frame, falling wedge watch. If the daily bounce gets going from here, I continue to watch this as a potential daily falling wedge. And so that helped us find the resistance for the weekly lower high, and here we are back at support. Bulls would love for this to be a weekly or a 2-day falling wedge to shape up a monthly higher low. But again, the burden's on bulls here in the short term, because as we're going to look at here in just a moment, our major sectors, XLF and XLV and IWM, they're all still very weak. So let's talk about the live streaming trader's dilemma. So this is something that have struggled with for a long time, but let's just go into an example. So this morning, Tesla was the name that I was looking to choose to play the bounce in the market. And I watched this drop, and I was watching the NASDAQ testing the support. I know I'm looking for a bounce in the NASDAQ. The futures were 4-hour oversold. And so I made an entry, I believe around 205, and stopped out at 203. And as I'm making that entry, it's not based off any support level. It's based off the NASDAQ 4-hour RSI and the fact that we gapped down open. And the fact that obviously Tesla was really beat up on its earnings reaction. Its 4-hour RSI was crushed. It was a stair-step waterfall drop on the open. And for me, that was enough to be looking long. So I knew that when I stopped out, I was 90% sure that I was going to stop out at the low. So if I were not live streaming this morning, for this trade, I don't use a stop loss on this trade. What do you mean you don't use a stop loss? Being 13 years into my trading career, I am confident in some setups to not use a stop loss. What if I enter at 205 and it keeps dropping? I enter a second position on a 200 break, and I'm very confident in my abilities that I can flip weak little bounces, even if they're bear flags. I enter at 205, I enter a second position of 200 breaks, I sell partial at 202, I've got my ammo back, we see another leg down. I can navigate that situation. I've done it many times. If I'm live streaming and people in their first year, second year, third year of trading are watching me, I have to be on top of all of my rules. And if I say to people, well, in this instance, I don't need to use a stop loss because of XYZ, this setup, this is why. I know that people in their first 1, 2, 3 years of trading are going to do the same thing and rationalize and say, well, Dan doesn't do it in this situation, so I'm not going to use a stop in this situation. And maybe it's, meta in 2022 before dropping another 50%. Or maybe it's TLT, which has been doing nothing but go down over the last couple of months. And so I know that I would be essentially feeding bad habits to beginner traders that can think they can do what I can do 13 years in their second year in. And so it's the kind of thing where, that definitely cost me money today, live streaming trading versus trading by myself. But on the flip side of things, if I look back at the last 8.5 years of live streaming my trading, I know that it has helped me on the whole, because I have to be a shining example of following your rules and being disciplined. And if I did not have that weight on my shoulders, I would not be as disciplined, and I would have, gotten myself into some holes thinking that I can bail myself out. So it's always the kind of thing where, when I'm live streaming, do I set a hard stop on every trade, or do I be a bit more ambiguous and say, I'm not setting a hard stop, I'm willing to maneuver around here because I'm confident in my abilities? So I don't have the answer. I know that it has helped me more than it has hurt me over the last 8.5 years, but today it hurt me, and Tesla is going to be trying the same hourly trend change as the NASDAQ and S&P 500, must hold the low of today and break the high of today. Then we zoom out, we look for a daily lower high as the bulls try and get the daily oversold bounce going. Semiconductors holding weekly support initially, 139.76 held on SMH. Same deal. So many individual names must confirm the hourly uptrend. The burden's on bulls tomorrow to follow through. If we don't, bulls don't prove anything. NVDA had a very big bounce. They also had afternoon news about making whatever chip in 2025. That led to relative strength. Here we are testing the high of the day after hours. So NVDA had the relative strength before the news, and then the news kept it while the market consolidated on the hourly. NVDA did not. But most importantly, NVDA is tightening up beautifully. Low, high, higher low, lower high, and now a double bottom in the 409s. We have to confirm the hourly uptrend here as well. We have a ton of space for an hourly higher low. Bears are watching 433, which was a double top on the way down. And we know anything under 476 is a longer term lower high. But let's go to the 2-day. Give me a nice 2-day equilibrium. Get as tight as possible. And then we'll look for a break to end the month or to start next month. So we'll see how much follow through the bulls can get. It is worth scouting a lower high compared to 476, but patiently keeping an eye out for it. Nice defense by the bulls at support on both SMH and NVDA. Healthcare, that 4-hour rising wedge, confirmed a big drop, and here we are testing weekly support, 126.88. So the weekly lower low has not happened yet, but on the verge. And again, most importantly, closing at the low of the day again as the hourly downtrend remains crystal clear. Hit the high of the day at 128.40, then an hourly lower high in the afternoon by 12 pennies before we rolled over. And the financial sector, same thing, just an absolute free fall drop, closing at the low of the day 4 days in a row. Weekly lower low is already hit. Now it's all about 30.12 for the monthly equilibrium. Are we going to remain in this long-term tightening range into next year? Or are we going to break support? It's all about 30.12. We're still well above that level at the moment. But again, it's complete bear control right now. Anything under 32.36, just another lower high. On the bounce this morning, we knew anything under 32.52 was just an hourly lower high. So the hourly downtrend continues to be our guide. And if the NASDAQ and the S&P 500 are going to get a daily bounce going, we've got to see the financial sector participate, because all it's doing is sowing seeds of doubt in the market bulls as it keeps dropping to lower lows. IWM, lower lows continue. It has broken its monthly tightening range bearish. Key support was 166.21, and that has now broken. And the way I'm viewing this is fear low, lower high, higher low, double top, higher low, triple top, bear break. And now it's all about 159.41, which is about 3% away. A little bit more than that, 3.5%. And why that level is so key is because if that breaks, we confirm a 3-month downtrend. Lower high and lower low. Bears would love to see that. And so that is a key support level to be watching. And we already know weaker sectors like XBI, they're on the verge of confirming a 3-month downtrend. When's the last time XBI has had a 3-month downtrend? Never in the history of the ETF, going back 17 years. Well, trying to see how this one's shaped up. I take that back. Technically speaking, this was a quick little lower high. That was a downtrend on the CVID dump. But still, a clear shift in the longer term. And at this point, I'm going to be looking for a yearly higher low on XBI, a 12-month higher low compared to 43.72, but I've got no interest looking long in this sector at this point. Look at the clarity of the downtrend and EMA 12 resistance rejections. And I bet a lot of those EMA resistance rejections align with hourly RSI, getting right up towards overbought. AI trying to hold the low. I will stop out of 23 psychological breaks. Remember, I went long. Forget if it was this day or this day, but sold 40% into this big green candle to put my break-even risk-free stop under 23. And the fact that it hasn't broken yet with ARKK and IWM so weak is showing relative strength, but not holding my breath that that's going to hold. Some foreign dogs in my yard. Pause. All right, where were we? MSOS. So the bears are back in complete control. And again, just to review, I anticipated a weekly higher low off EMA 12, built a position for this sideways range to break bull, broke bull on Tuesday, looked good. Definitely did not anticipate to give it all back the next day. But this is just trading 101, selling into strength some positions, knowing that a weekly lower high was the most likely scenario. So I sold, a small portion in the 730s on Tuesday. I then sold some 757, 760 right near the high of the day on Wednesday. And that is what kept me from a red trade. And so then when the thing that happened that I didn't think would happen happened, I stopped out to end last week, break even. And so that's, again, what we have to do as traders is protect against the things that we don't think that are going to happen. And so now monthly consolidation is underway. And monthly EMA 12 has rejected 1, 2, 3 times now. And if anything's going to change longer term, we got to hold the all-time low and break 988 to confirm a monthly uptrend. But we know that this sector is really news dependent, and that has to have a news catalyst if we're going to see that monthly uptrend confirm. So for now, we're back in the slow bleed, and the Canadian name's giving it all back. So back to patiently waiting for a headline catalyst there. Crypto stocks seeing some strength today. Coin had a daily equilibrium bull break. The hourly consolidation left that upper wick. But Bitcoin right now is testing 16-month highs as we speak. Looks like we just missed. But 16-month highs being tested, and the crypto stocks are nowhere near 16-month highs. Why? because IWM has been dropping for 3 months. And that is growth names. And so we had MARA get to the highest level in October, or at least the first highest level in a couple weeks. But a lot of work to be done here. And we could say there's still a ton of relative weakness in these stocks compared to where Bitcoin stands. And we'll keep an eye to see if things shift here. We can say things have shifted in crypto over the last week, but they're not shifting in the crypto stocks just yet. But coin is looking for a monthly higher low. And a monthly inside bar this month is likely to form. And if this monthly inside bar were to break bull in November, wow, it's almost November, then that would set the monthly higher low. Dollar, on the verge of confirming this head and shoulders pattern. It was a prolonged right shoulder, but if we break 105.53, the daily downtrend confirms. We'll then be looking to weekly EMA 12, but that will be the first time for this entire bounce that a daily downtrend confirms. And the dollar has clearly been weaker than the 10-year recently. Ackman saying that they covered their TLT short, and that is leading to daily consolidation in the 10-year, but anything above 453 is a daily higher low. We would have to confirm a 4-hour downtrend. We would have to see 50% plus retracement if we're going to call it a weekly bull flag with no follow-through. But keeping an eye on it, it's not a coincidence that the broader market is starting its daily bounce attempt today. I mean, this was the broader market real weak, and this is the start of the bounce attempt. There's definitely some impact here, but TLT, again, give me the first daily uptrend in 3 months. Anything under 88.47 is a daily lower high. Bulls are just hoping to shape up an inverse head and shoulders at this point. Still a lot of proving to be done. Oil, moving on to CLZ futures contract. How'd that 4-hour rising wedge continue to go? It broke bare. Is that the weekly lower high being set? I'm sure watching for it. Still need to drop down and break 84.39 for it to officially be set. Bears will have to eventually confirm a daily downtrend to continue to gain confidence. But I'm watching bearish oil. I'm watching XLE with a wall of resistance at all-time highs. If XLE bounces, when XLE bounces from here, I'm scouting a daily lower high swing trade. I'm scouting a monthly rising wedge in the energy sector, but oil would need to confirm a weekly downtrend if the energy sector is going to confirm a monthly bull flag. We're seeing the first signs of some weakness. I'm also watching, do the airliners, jets, after their impressive dump recently, do they hold 3-month equilibrium supports? We've been in this pattern for 3 years. Do we hold 3-month equilibrium support if oil tops out and shows weakness, knowing that the airliners can many times be inverse to oil? I'm just keeping an eye on it very loosely. I care more about looking short energy for the oil weekly lower high. But impressive. Look at UAL. How's that for a weekly stair step? Now, there's one of them that's a 15-week weekly stair step right now. I forget which one. But airliners have been crushed. And natural gas trying to get some kind of bounce going off of weekly EMA 12. It's been much more of a pullback than the bulls want to see. We have to confirm a 4-hour uptrend for anything to change, but giving back a lot of the recent strength with a 15% plus pullback at this point. So I'll see you all live streaming tomorrow morning, and we'll see whether or not the bulls are able to confirm the hourly uptrends to get the daily bounces going. Gotta see XLF and XLV participate to a certain degree. Do good things. Cypress tree is just starting to turn. Crepe myrtle. And everything else. Got one last week of summer-like weather. I think that's going to be all she wrote. These surprise dahlias are keeping some of the late pollinators happy. Going to clear out this bed and plant some garlic here.